Give it some like, give it some love. We'll see you in just a second. Market's ready to start. Nasdaq up, S&P up. Opening rational, both sides, all indices. VIX looking okay, nice and steady. No index catalyst directly today. We might see something. As the minutes roll in. Today's final voting day of midterm elections. You know how that's going to be. Mark it up as 1 minute. Get ready, and let's get ready to go. Midterm outlook at 12 p.m. Yeah, that's what we're going to do. Do some coverage there. Market's getting ready to open. Let's go. Why every time I reset my camera it does this? All right, let's get that field of view a little wider there. There we go. That's a little better. How you guys doing? Oh, we're not music at. Okay. Oh, market's open. 2 seconds, kids. Ready to go. Let's get our liquidity maps going front and center. Make sure you get your liquidity map open. Okay, let's get ready to go. Okay, do this fast. Both the irrational market checks look pretty good today. Okay, let's do SPY really quick. Let's make sure you guys check on that irrational. Oh, I got a long out again. Okay, we're inside Doomsday bands. Rational. VIX is okay. I mean, it's really gone anywhere. We're good there. Let's open up Rocket Scooter really quick and take a look at what we have. We do our no catalysts today, so the market is not irrational on that. Do our 2 other checks. Okay, let's run this. Get my classic app up here really quick. Muted, my man. Sorry about that. Yeah, I heard. See, when I hear like the behind me, footsteps coming down the stairs, then I know someone's coming in here to the mini fridge to grab a Celsius. So I mute the mic, just so I can be like, "Hey, babe, how's it going?" Okay. So Catalyst is not an important day. Catalyst is an event, something that happens that moves the market a certain amount. Okay, and that's it. So you have to move the market a risk interval. It's considered a catalyst. Catalyst is an event that hits the market that you didn't see that move happening. Like an important day could be the source of a catalyst. Now, once elections are over, that will likely be a catalyst, but not going into the election. Okay, so QQQ mean reverting long up. So QQQ has support through here and resistance in here. So QQQ again is likely a range stay between these two guys right here. So QVXY, make sure there's no strange volatility. Remember, everything looks good today. You guys make sure you hit the like button really quick. Help that YouTube algorithm out. Okay, so when I told you guys, everyone pay attention, you got 5 seconds. I'm going to start talking, and I'm not going to repeat this for the rest of the day. UVXY in a bull zone is irrational, either or only if you do one of two things, okay? Where's my drawing tool? Let me close my drawing tool down and open it back up. Oh, that's the old one. Why are you not drawing? Oh, okay, hold on a second. Let me close out my drawing tool really quick and reopen it. Only if you break into bull zone when you're not in it, or you're in the bull zone and you hit the edge. That's it. The action of touching this is the irrational part. Do you understand? The catalyst would be the catalyst would be anybody winning the house, right? Wall Street will behave how Wall Street wants to behave no matter what. So that's the whole thing about a catalyst, is you don't know how people are going to behave about different things. So that's the thing. Bad news could be good news could be bad news. All news is news to somebody. What if some firm was banking on some specific representative or senator or something being in office so they can get that contract, so they can get that inside thing, so they can get that trade, and then all of a sudden that person loses and that firm liquidates all their whatever that stock was, and you wouldn't know. And the catalyst is the net sum of all that shady behavior. That makes sense? I mean, that's really what Wall Street's elections are. All those underhanded, seedy ties that people have with their own monetary self-interest. Does that make sense? Okay, there we go. So in reality, just about every single catalyst is somebody moving the market because they're selling or buying based on something that's their justification that you'll likely never be able to know. And it's definitely not fundamental. It's usually something like 3 or 4 layers deep of some kind of connection or some kind of thing, an outcome. Oh, this guy didn't win. He's going to be the person that's going to sign this bill that's going to help our company do this one thing, or help that company do that one thing. And we have a lot of that company. Let's sell it all. But that's the good catalyst for the house, right? It's the... So why is the market going down? And it's the sum of everybody doing those little things. All right, so you are irrational only if you break into bull territory when you're not, or if you open in bull territory, not a catalyst. Everybody pay attention and make sure you tell everybody this, okay? If you're in bull territory, not irrational, when you hit that boundary, forget about hedge pressures for now, when you hit this boundary, it has a violent reaction for whatever reason. VIX is just finicky at this edge, not because of hedge pressure. But another thing is, if you break into here, you got 2 hedge pressure breaks and a bull zone break. So that's 2 different things. Everyone understand? Type yes in chat if you're good. We can move forward. You've asked this yesterday. We had 2 irrational flags. VIX kind of was like doing this, and then it did this. And a lot of people were here for their first day. They're like, man, I tried to trade, and God, it's just, everything was all weird, and I didn't understand. Resilience was off. And we say, well, that's what happens if market's irrational. Did we have irrational flags? I'm like, we had hour-long videos, right? 2-hour-long, 3-hour-long videos. And everybody's like, man, those videos are great. They teach me so much stuff, but can you make them shorter? So we made like 5 or 10-minute videos that y'all still don't watch. Just kidding. Actually, y'all been watching a lot of them, but make sure the first thing you do is watch all of our training videos. They'll teach you that. This is what VIX kind of did yesterday, and resilience was all over the place. Okay, that's it. And if you tried a long or short, I sat out all day and did nothing, right? And the market just did this all day, and then the last 2 hours of the day, it did that. And some people were like, well, what if I missed that? I'm going to tell you something. You didn't miss anything. That end of the day, last 2-hour run up, when volume has declined all day, volume starts to advance in the last 2 hours and to close. This is random, 100%. We had machine learning trying to find relationships between this and all kind of things, hedge pressures, everything. It is 100% random. The run up in the close is everything new with expiration of weekly options. People are getting out of the way of midterms. You cannot have predicted one or the other. In the last 2 hours of the day, I had elected to sit out. Market did nothing, then rallied at the end of the day. Why? Well, There's no mechanism for it. So the last 2 hours a day, no trading decisions I make, period. No new trading decisions, because that part is completely random. If my positions I swing that I'm in go up in my favor, that's great. If I want to be swing long, I can add to the dip. I can let my swing long ride a little bit. Okay, let's go through and show you how the scanner works, everybody. So get your scanner front and center, but hit that like button. I'm telling you. We count to 10. Drinking my Celsius. 50 likes, let's go. You gotta have to hit that like button. We only stream for an hour on YouTube. Members, after this, we end up going to Discord for about 2 hours. We're gonna talk about everything. We have a special midterm election themed stream. Everybody go here now while you're waiting. Get yourself in there. Discord is free. Best Discord on the planet. Go here. Get the free trial Rocket Scooter, no credit card required. You can sign up right now, play along with us, get all the irrational calcs we talked about. Get yourself rules to sell the market. Or get a copy of our playbook. Click the like button. We'll come back ready. It's set. Go. Okay. SPY. Long up, short up. It's hanging on hedge pressure. The next thing you look at is resilience. Resilience is going to tell you all you need to know. Right now, regular half gap resilience is less than 0, which means half gap is resistance. Out the door, you would have known that. That's a trade idea right out the door. Market gaps up. Resilience is negative. You know it's going to fill the gap to the downside. Resilience is a gap fill predictor. Here is that gap fill, which is exactly right here. See that? How awesome is resilience? Why did... Let's do this. I'm going to pick the different music. I want to listen to like Twitch streamer music. I like that stuff. I like some of those artists, but it's just too like video gamey. I want to hear some like chill house beats this morning. All right, cool. All right, resilience is less than 0. We expect this to be resistance. Now we have a hedge pressure break. This is also considered irrational if you lose more than a strike. So below 379, market's really crappy. If you're a bull, the bull entry point is from here to here. Now, anytime short up or long up, I'm going to go ahead and go and look for some bull signals. So the first thing you can do is look for some bull signals there. And since the S&P and resilience is less than 0, we've fallen through half gap. I want to find some bull stocks that are above half gap that are lagging the S&P to fill their own gaps, right? And so we have a distance to half gap is also there. So I can sort by which one are the farthest away from their half gap. It's right there. And I can see, I think we have above half gap as well. There we go. So all of these pieces are in play. Above half gap and distance to half gap, okay? So now I can find stocks that are above, that are short opportunities to watch on my watch list just in case they break and then go down. People were asking yesterday. It's an example. PayPal. If you are a bear on PayPal, then you get that opportunity there. So the way I look at it is I look for things that are behind the index when the index is falling a little bit. And then I look for those setups. It's a BLD. And if I come into the BLD on the playbook, here, and this you guys can get access to in our Discord. You see in that BLD there is that sandwich between these two. Other short opportunities, I love to short against monthly hedge pressure as well. So BLD has this kind of downward upward push like that. So I would take PayPal if it got a little burp up in here and I would scalp it right back down to there. Does that make sense? Some people are asking how to find short ops and things like that. I'm looking for stocks that look like they're going to come down while the index is lowering. That's how you do it. Is you look for things that are loading up behind the index, right? Do we understand? Get a little yes in chat. Somebody's asking yesterday, what about short ops or long ops? How do we do both, right? And that's how you use the scanner to find that. And there's a lot of neat relationships. You guys join as a member. How about today I give you an hour-long lecture of all my clever scanner settings that I have. Teach you guys all my scanner settings, and actually I'll make this into an official video. How to use the scanner. Would y'all like that? And then I'll make a post like PayPal looking juicy for a squeeze trade from there to there, there to there. Yeah, okay. So essentially, right, if the S&P's resilience is down, I'm looking for something that would likely want to fill its gap here. So distance to half gap is really far. So if half gap is resistance on the S&P, I'm going to look for stocks in that S&P general, stocks in general, even ones that aren't in the S&P, that have a really far distance to half gap. And look at them: DD, Amgen, GNRC, RCL, AMAT, etc. Starbucks. Now again, it doesn't mean that it's bearish. It means if you're bearish. So I'm looking for ones that are on the bull side that have that same setup like TSM, the ones that are in between hedge pressure and monthly. So to further refine, we're going to do below monthly and above hedge pressure like that. And to be even better, not just distance to hedge pressure, distance to half gap, distance to monthly hedge pressure. Which one of these is the farthest to travel? A far distance from half gap and a distance to monthly hedge. So for instance, TSM, ASML, and Microsoft are the ones that are right on the edge of monthly, down right on the edge, that are actually short if there is a short again. Like this, I'm looking for ones that are right at monthly hedge pressure that would fill their gap. So now I'm sorting by the ones that are closest to that. And that's how I do it. I'm looking for BLDs sandwiched in between the two lines that are right next to yellow from the bottom that are likely going to fill their gap. So ones that have gapped up. Does that make sense? The scanner, I can be very picky about what I want. So this, again, distance to monthly. Something that's right, USB just flagged to right on that edge. So I'm looking for something right on the edge to come down lower to here because monthly resilience is less than 0. Half gap resilience is less than 0. So things that are going to go down and fill their gap, just like that. That's how I do that. Questions? Soxel. Ooh, semiconductors. See what's going on today with the Soxel, because that's going to affect everything I'm doing. I got my Microsoft's looking hella hot. Disney, I'm probably getting my entry point today on Disney. My Google's looking good. My Apple's looking okay. I don't know, my Apple's the smaller position though. My bigger two are going to be Google and Q's. So Soxel in that same boat. Do you guys see that? The way I sorted. Again, the sorting criteria. To make sure you go to rocketscooter.com. You can get the scanner yourself. It's how I play the game. I can't play without it. So Soxel, again, not saying that it's going to do this, but the conditions are as follows. If you want to bet on something, I wouldn't particularly look at the Soxel. Today, I think the Soxel's looking great because I think that industry is going to look good. Even though technically there is a scalp like so, I wouldn't take it on this particular ETF just because that sector is looking really strong over the last week, right? All the tech is looking good. I wouldn't play a specific thing fundamentally. So you always have to have a fundamental bias because technical trading in general, let me just tell you guys about technical analysis. Technical analysis is completely garbage. Don't ever buy anybody's trading system that's based on trading indicators, especially a MACD or like Elliott waves or harmonics and that stuff. Nothing, you can't algorithmically automate that stuff. The biggest scam in the industry if you buy that from people. So don't listen to that. Technical analysis will show that this is a potential move down, but you always have to back into fundamental reasons. People will buy something for whatever they want. Soxel representing the semiconductor index, it is not necessarily going to be a technical play if people want to buy this thing. So the bias for me for something that has a catalyst for its own purpose is also in our strategies, and you ignore it. For instance, something has earnings, you're not going to try to technically play it or play it off of pivots or volume. It's going to move because it's going to move. And so if you go to our strategy guide over here in Trading Strat, so our Discord has a whole section of stuff. You'll learn everything I'm teaching you in these little channels. Liquidity map will give you the picture with all the playbook on it. Doomsday will show you how Doomsday indicator works. Trading strats, etc. Individual stock or ETF catalyst. So if there's a reason something's moving or something's strong, it will fundamentally move on its own and possibly break. So I would make sure, I would clear and say, you know, the ETFs are a little different. I would look at individual stocks and not just say, okay, it's a short signal, let me take it. trading doesn't take place technically for the most part all the time. So you'll find something that just has no reason to move, and you're going to say, okay, well, the S&P has some downside pressure, then stock X has no catalyst today, and it looks like the S&P, so let me go ahead and trade it like the S&P as well. It just hasn't moved yet. So we're going to go to like distance from hedge pressure again, once right on the edge, and just find maybe Dow, right? Does that make sense? You can't just take every single thing as a potential signal. Now, what if I wanted something that has a lot of room between these two as well? There's not a lot of like space between here. So it's called hedge distance, right? I want something that has a high dollar or percent move on distance, and hedge distance is distance between the two. Looks like in a dollar amount. And pretty soon we'll have it where you can actually change these units to dollars to percents. Like TSM has a $2.50 move between the hedge pressure, so that's a big one, right? And again, semiconductor is going to be part of the SOXL. So I'd have to make sure that it's not something that's moving for any other reason other than just trading this. To be like gold is going to follow the gold, right? Just any stock like in INTC, it's going to follow this as well. Into it, Johnson & Johnson. Like I'd look for some stocks like that. And again, I'd want some that have that kind of push between the two hedges. Now again, there's not a lot that I'm finding that are really good, except for the first two we talked about. But something like Johnson & Johnson, I'd put on my watch list when it got there. There'd be my entry point, right? Questions you guys have? Questions? Okay. Let's find some bull setups. Yeah, let's run the scanner on some bull setups now. Okay. All right, let's go back to the drawing board. We'll go here. And let's say that the index is, resilience is trying to go positive. So instead, let's search for some bear setups, right, that are in that same boat. And then we'll go ahead and look for a similar thing. So we're going to look for some bear setups that are below half cap, right? Oops. Below half cap. And we're going to look for... Let's pull up the playbook, and some of the bear setups I like to bounce off of monthly. If I'm a bull, I want to find things that are hitting monthly. We call this bull structure when you're above that yellow monthly hedge pressure. So I'm going to search for some of these guys, right? BLU, BLD, BRSU. I want all the ones that are by yellow. So first, let's go there. All right, and I'm going to show you again the ones that are by yellow. BLU, check. BLD, check. BRSU, check. Right? BSU, check. So these are the ones that have potential to bounce from there to there, there to there, there to there. In between these two and there, we have all the monthly hedge pressure bounced. I'm looking for things that are going to be bullish or bear structure. This is another way to do it just off of monthly hedge pressure alone. With the S&P resilience less than 0, now you can say if you want to find the ones that are bullish from here or bearish from here against the half gap. Let's say that I'm anticipating a move ahead. The S&P is going to break through and fill its gap. So I'm going to look for stocks that are below half gap as well. but that are above monthly hedge pressure on that bounce. And that's it. And if I want to further refine it, I want to make sure I find ones that are below hedge pressure enough that there's enough run between those two to get it. So below hedge pressure. So essentially I'm just drawing what I want to see. And maybe down the road we can have an interactive playbook where you can just literally click the arrow on, like you could basically, ooh, that's a great idea. Man, I like this idea. You can just say interactive playbook. You can search for whatever you want. Click the arrow, click, 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 and then it searches for them for you. That'd be kind of cool. Okay, let's look at DD really quick and double check that. But you guys see how the scanner is this way, right? I'm now searching for anything that is got a particular liquidity map that has interaction with monthly hedge. And then I'm looking for ones that are above because I'm looking for bull setups today. Just because the S&P could break up and I want to get ready for it. I want to build a watch list on things that could go. So I want things that are in bull structure, which is above monthly. I want something that's below hedge pressure enough so that there's room to move there, there, and there. I want something for half gap to currently match where the S&P is. That way it'll, if it trails the S&P, we're good. So first thing I'm going to do is I'm going to build a watch list on some that are right next to monthly. Just like that. EW, Yeti, SPCE, etc., right? Just like that. Now, I want to further refine by something that's a certain distance. See, res just broke above. I'm glad that we're streaming this live while we're here because you can see that that's exactly what I'm looking for. I'm trying to anticipate something that'll rush and fill its gap. So let's find something that has a higher hedge distance on a way to travel in TES. Low volume might be illiquid, but you can see that you can construct whatever you want. Right? MRVL has a huge distance to hedge, but it's really far away from the bounce point already. But as you see, I can find things that have that setup and I can trade them. Hopefully that they will. This is a great one right here. This is the perfect setup for what I'm demonstrating. Example here, take a picture. Is that if the S&P resilience goes above 0, I'm just going to draw it. You see what I'm saying? A little reflection there. So I'm looking for something that if this breaks above 0, right, then I'm looking for something that is right on the edge that will fill its gap higher and limit there. Did we see that? Everybody type yes in chat if you follow what I just did. I was looking for this exact setup that has that particular move on the scanner. Okay, that's how that works. Okay. And then that's when your shot callers or whatever, I don't know what you guys, where y'all come from. Your shot callers are just picking stocks out of their booty. Okay, should y'all get in there? Oh, Yeti is an example. The example was the S&P resilience was trading higher. So I wanted to find all stocks that were close to monthly hedge. Then I wanted to find all stocks that had travel between the two hedge pressures. Then I wanted to find stocks that were also below half gap, that if S&P pushed higher, then it has the mechanism to push higher and fill its gap. And then I wanted something that had a lot of distance between the two hedge pressures to give yourself a lot of room. So all of that particular example was I was looking at this, 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 and this with enough distance of travel that was lagging behind the S&P just in case the S&P broke. Y'all see how that works? Pretty cool, right? on one second, guys. Nice bull setup today. Hold on one second, guys. Okay, so Yeti, see how it's doing that move right there? That's exactly what we're looking for. Oops, hold on one second. All right, sorry, I was chit-chatting with my team. All right, you guys, got this going, looking good here today. All right. Guys. Okay, we'll talk about the midterms, what's going on today in just a second. Can I get this link out here, get you guys ready for this. Do some more scanner settings today. It's about the plays that I'm in. Yeah, those of you, you have to add liquidity map to your charts if you haven't added it before to get it saved. So here's that Yeti play that I was talking about today. There's the bounce from there to there. We all on the same page. You can see how that works. Okay. Love their coolers on their spread. This isn't BRSU ultimately a down day. No, so liquidity map does not predict direction. This is one thing that technical analysis has poisoned all your brains, and I'm glad you guys come here to learn how trading really works. Arrows do not tell you the direction of the market. They tell you where buyers and sellers can be, not... You can't predict the stock market. Nobody can, and don't let anybody tell you they can. That is a lie that gets you to buy books and trading courses. So while BRSU has downward pressure, historically there's more of these than stocks that trade up. However, it's empirical. The idea is the way you look at a liquidity map is if price is here and if I'm a bull, then I'm buying because there's buyers here and I'm selling because there's sellers there. It helps me plan a reward and risk trade. It doesn't mean it has to bounce from there to there, because everybody wants to buy trading software and trading tools because they think any magic combination will predict the stock market, and it can't. Now, while these things empirically do this most of the time, which is where those arrows came from, it doesn't mean that every stock is going to do it most of the time. One stock may do it 60% of the time. One stock may do it 100% of the time. It's the stock market's random, and people are going to buy because they want to buy and sell because they want to sell. But this is the positions of everybody in the hedging that's currently there. Hedge pressures are very sharp pivots. You can expect that activity, but it doesn't mean that it has to do this every time. It just means if you're a bear on whatever fundamental thesis you are, or a bull on whatever fundamental thesis you are, you look for trades that have buyers. If I'm, okay, let's say I'm bull and I found some BLUs. No, I'm bull and I found some BLDs. I need to long where I know buyers will be. Well, there's buyers and the hedgers there and buyers and the hedgers there. So I have two options to long because I'm bullish, not because there's green arrows. Do you understand? Make sure y'all clarify this. One of the first things I do when people come in and say, these are all bull and bear setups, empirically just means you take all the data you have and this percent was this way and this percent was that way. It's just historic data. And it doesn't reflect real-time changes, catalyst or sentiment or anything. You guys understand that, right? So what you want to do just in general on this is that when I'm bearish here, I'm not going to be bearish these setups because there's such a strong wave of buying. I'm not bearish these setups until I'm in the opposite side where it's illiquid. Okay, does that make sense? Okay, everyone understand? So you're not predicting the stock market, you're predicting where you're behaving with whatever reason you want to buy or sell anything. This is just the best way for risk management. So if I'm bearish, so let me get something that's like a horrible thing, horrible color that you guys are gonna stand out here. If I'm bearish in my stock, if I want to short whatever stock that I hate that company, I want to short whenever it's got a short setup. So if it's BLU, simply there is no short that I can see with the exception of where there's no arrows, right? This is where I'm looking to short. Same thing. Maybe I should pick something that's like a dark blue. I want everybody to tell me, confirm in chat really quick, and I'm going to go through, pick some plays we're going to talk about this morning, right? I will short there. I will short there. Or if it's up here, I'll just wait. If I'm saying I want to short GameStop, right, and it's BLU, I'm going to wait and wait and wait and wait. Not short as it keeps going higher. I'm just going to keep it on my watch list. The minute it goes to illiquid territory, boom, there's my short. Do we all understand? So when somebody says it's bearish or bullish, this is not predicting the stock market. This is predicting where, or not, this is telling you where everyone's positioned and where that buyers and sellers can be and should be, and where the unusual volume will be. But it's not going to predict what happens when you get there, where the market goes. We all on the same page here? Say that I'm long something that's a BRSD, or I want to be long something that's a BRSD. Well, I know that if I say bought the previous day and I wake up here and it's a BRSD, then I know I've got waves of sellers coming through here and here, and I'm not going to be greedy and bet that it goes there. So say that I bought the dip on earnings and I wake up today and it's this setup. I'm like, shit, right? Market moves this way and it gets a little pop to there. And I bought, as an example, right? Say that I bought something, Google, before earnings, just a little bit of something, just because I wanted to have like a small position, and in case it rallied, have a big position. Remember, I got pretty heavy in Google. I got light at the beginning, and when it dipped, I went heavy, like really heavy. Not really, like relative to the original position. So say that I bought and then something tanked on earnings and I go, man, look at me being a silly gambler, and it fell to here. Next day I wake up to BRSD and all of a sudden the market's recovering, right? And this goes to right there. Do me a favor, chat. Tell me really quick. What would you do if you saw this? Remember, this is risk management. This is what this whole thing is designed for. I got some of it back. Am I going to have that, ooh, It's reversing in my direction mentality. Let me just hold on. Or should I say, thanks, universe, for giving me some of it back? What would you do right here? Right? Seller, I would sell or trim because I know I've got some sellers coming my way. Doesn't mean it's going to reject, but it means there is like a whole wave of selling that could come through here. And that I know that if it does this and goes there, what if I just sold some for profit and it pops to there? I can easily put it back in and get back in, and then again lower my cost basis with the same amount, and it could sell and below my lower lows. Okay, I'd stop, right? Just general trading. But if I still wanted to bet that it continues to push higher for whatever reason, and I got a second burp, I can sell the rest of it there. Market bounces to there. I can get back in a second time and let it go. Doesn't mean it has to go that direction. If people want to buy something, they're going to want to buy something. But it allows me to understand where those waves can come. And it could just rally, right? But I know I can sell, get back in, sell, get back in, etc. Does that make sense? I can map out where sellers will be so I don't just buy, like the market's rallying and I double down at the high. No, it's going to reject there somewhere, and I can actually get in a little lower. Likely reject there somewhere, maybe I can get a little lower. But it doesn't mean it has to come down. Likely it will most of the time, but it doesn't mean it has to. So that's the whole point, is understanding where buyers and sellers can be. So if one of the things that is very consistent though is when you are between the two hedge pressures, that the market doesn't likely break them. And that's like 90% of the chance it doesn't like to break them. Doesn't mean it can't. And that's just the S&P alone. Individual stocks, the thinner they are, may do it. But I know that the pivots exist at the edges. And I know there's not a lot of candles for Yeti on here, but you can see that it's kind of trading between these areas. And that's the whole point of that. Okay, let's look at SPY today. You guys have any questions about how this works? Let's talk about the midterms today. Or just ask me a quickie question. Is there anything that's tracking the election results? It's not biased. That's the one thing I always hate about the trackers. Sometimes they're delayed, or if like Democratic bias or Republican bias, and then the other side starts winning or whatever, that they might like delay their update or whatever. Okay, Pepsi running on the go today. Okay, let's look at Pepsi. Pepsi's looking hella hot right now. The BLD on the breakout. Let's do a monthly map on Pepsi and show you guys where we're looking for that guy to go to. Does anybody have any questions? And also, if it's your first day here, let's talk about Doomsday. This is one of our pivoting indicators. We haven't seen, let's ask you guys a question because we did this yesterday. Remember Doomsday, everyone in chat, participate. There's no active catalyst right now. Midterms are going on. Everything's nice and stable, right? We have no irrationalities. We have check, 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 check. All the market looks good. Oh. Give me 1 second. I gotta help a member with access really quick. All right, it's your first day here, and you have a if it's your first day here, let me know, and I'm gonna give you a little bit of advice on how to get into stuff. And somebody give me a tracker that we can follow. That'd be something that would be easy to do. I want to see, and again, we'll come back maybe in the middle of the day and see if we can't talk about it as well. right? Okay, welcome to the, we had 3 new lifetimers this week. Welcome to the team, you guys. Pushing to our 1,000 member drive. Metals making a run for it. Yeah, absolutely. Okay, so we are in between the bands, in between the bands, in between the bands. Doomsday applies. You're going to go straight over here. Doomsday is a very nice predictor of the S&P. DD is 0.82. It's going to love the upper bands. Today is a DD trade. Whichever one touches, the first one that taps is the one I'm looking for to be the run-up. I'm long QQQ. I have 310 December 9 calls for Qs. Very aggressive, but I think I'm going to get a decent run on those. I've got 100. I've got Google 100 strike calls for December 9. 110 strike call. Wait, no, I'm sorry. I have a mix of Google 100 calls and Google 110 calls. So market's running here. Whichever one touches the band first, it's done. 538 Electro Tracker. Can you send me a link? I'd love to check it out. Right. You're looking hella good today. Okay. All right, let's go. So that DD, there's that upper band touch. We're going to see our first sign of volatility coming through there. I mean, VIX is just indicating, we talk about this all week. We have this indicator called triple B. That's one of the reasons to support my bull thesis. The whole time, everything that I talked about, the market was bottoming for the year is in the tweet that I made. If you guys want to know my Twitter account, I've done maybe 2 or 3. Actually, I've done, this is my second pinned one. But all 3 waves of the market I've timed exactly right. I've gotten all of them, as a matter of fact. This one was pinned on the 17th, we're calling a bottom for the year. The one in July was the 2-month bottom. I had that pinned for a couple months. You know, that's when we went from like 6,000 to 11,000 followers. That a lot of people were like, holy shit, how these guys do that kind of thing. And now we're just kind of rolling through. Same thing, October 17th. Not that I'm right, not that I'm wrong, but that's exactly what I'm looking for today. One of the thesis that we have is below triple B in November. That is another calculation of Rocket Scooter. Remember, we have 14 unique indicators that nobody asked. We invented all of them. The process is all here. I've relabeled and reorganized everything. So if you come to Rocket Scooter, I want you guys to do me 2 favors today. Go to training videos, and I want you to watch the training videos that are here. This is an hour worth of content. You will catch up so quick if you watch them back to like 5-10 minutes a piece. Just watch the ones. It tells me how to do, why we're predicting volume instead of price, how I sit out for the day, how I pick my profit targets. Each one of these rules go over the calculations, and the calculations are here with more description. Each one of these things and how we measure them are specific rules here. These are rules of thumb, like when I trade, when I short, whatever. Currently, this is where we are now. If VIX is above triple B, I don't like to long options. And these are really much all my rules that I use when I trade. So today, one of the things I'll describe is a month-to-month thing. Where is triple B? Did I lose it? Oh, I might have accidentally deleted it. Oh, here it is. Here it is. Here it is. Full bear breakpoint. VIX. And let me actually call it. Okay, I was like, hopefully I didn't delete it. Okay, what triple B is, if VIX is greater than triple B, there are loose pivots and overshoots. If VIX is less than triple B, razor sharp pivots. BBB can also pivot the S&P rapidly. We saw that earlier this week. So anytime something's in play, it's useful to come here and get the description of it. Go to the glossary. We'll define it even further. Triple B incorporates the contango effects in the VIX contracts to derive additional pressure from hedging mechanics. It's one of the bigger ones. It does the usual unusual market. It is a month-to-month calculation. You do it once, and because we're rejecting it, the market is not volatile for the month until we get to here. This is what supported my bull thesis. Rule number one, we're below triple B. Number two, dealers are positive. Number three, market was liquid. Number four, we flushed out, and now we're getting bull setups at the bottom. So at the end of the day, everything's bullish, and that's why I grabbed the dip. Okay. That triple B is nice and steady, and that's what I like to do whenever I'm making my plays. Now let's see, where's my telephone? Oh, cell phone, telephone today. Hey, Lucen, what's up? Yeah, SPY always takes precedence over Nasdaq resilience. Nasdaq resilience is more of a formality than anything. SPY does drive the boat. Here's that Doomsday tap. We just got it, and that's that pivot we were looking for, right? Perfect. There it is. Look at that. Let's go ahead and zoom in on a 1 minute chart. Well, it's close. It hasn't touched it yet, but it's pretty much there. If there's the volume spike, then it will be considered a touch. Let's see if we got it. And there's that volume as you approach it. It's getting close, right? Nasdaq, same thing. Isn't that cool, right? Now that might be the limit of today's upside, but we'll see. Market's looking hella strong, and I like what I'm seeing. Let's pull up some of my favorite stocks today. Let's look at Google. Let's look at my positions. Let's see what Google's doing, and let's do a monthly map on it. Okay, and we'll do one more monthly map, and we'll call it a day. We'll go over to Zoom really quick. Everybody make sure you go to the Rocket Scooter Discord. The monthly maps to be on cool. Oh yeah, absolutely. Okay, so anybody have a midterm tracker that's like non-biased that I can actually look at? Just shy. I'm too lazy to go Google it, but we want to make sure we look at the results. In all honesty, I think that there was a post that said when you have a Democratic or Republican administration, but the Senate and House are controlled on the other side, doesn't matter which one. If you have a split house, or sorry, a split, I don't know the word I'm using, but one administration's one, House and Senate's the other, that the market has the strongest bullish gains on the conflict historically. Now, again, empirically doesn't mean anything, but people get a little scared, I think, with the totalitarianism control when one party owns all the things, whether it's Democrat or Republican. People are a little finicky because of the massive changes that can come from that. The idea that you have that fight adds a little bit of bureaucracy to the process. It takes forever for things to happen. One of the examples is during 2015 when the Senate wanted to remove the oil export ban so that we can leave the NAFTA realm and just only exported our oil to Mexico and Canada. United States couldn't export oil to anywhere else. And at the time, there was rumors of a Chinese conflict in Taiwan, right? This is where that all started. In 2017, if you guys remember, China was stockpiling their strategic reserves in oil. This is a great story, and we'll tell you a lot about how markets are really moving. Let me just put something front and center. We'll talk about oil prices then. This is like a 1 minute blurb. I'm not getting too heavy into this. But I remember exactly because I was there trading it. I remember I shorted oil back at the top. One of my first big trades I ever did in my life was calling the oil crash. I was really good at that and scooping up the oil bottom. So, you know, back here, you heard all those rumors, right? That United States is going overboard in the shale market. We knew the shale market was collapsing because companies are going under left and right. The Saudis flooded the market, oil crashed. Here's when China was stockpiling their reserves. That big run of oil from 45 to 75. That's a big run. And that was the reason why. But down in here, we couldn't sell to them. And of course, you know, the Senate and everybody was like, well, we need to enter the open market, or, you know, OPEC, you know, we need to enter the market so we can actually acquire them as customers, right? And OPEC was like, well, let's kick the Americans out of the market. And so let's flood the market and crash all their shale, you know, industry, crash shale industry, right? And companies will go under and reduce the value of oil, because the break-even point on a lot of those, like in Bakken and such, are like 80, 90 bucks a barrel. And so they collapse at $30. So then we shut all those rigs off. During this time, because Obama was president and we had Republicans in control of Congress, you had that conflict that delayed lifting the export ban, right? The Congress was like, let's do it. And Obama says, let's not, until I get what I want. And so they call it pork barreling, right? Where you add, you're like, you hold a bill hostage because someone really wants it until they add the things you want in it. So a lot of those EV changes and things and tax breaks for electric cars and stuff came through that effect. And it's basically like, yeah, well, I'll let you lift the export ban if you give me what I want in the bill. And that's exactly what happens. So when you have a split Congress and administration, there's a bureaucracy, right? And the Saudis are so brilliant at trading. They're one of my favorite traders on the planet. Whoever the crown prince hires to trade the oil market, they knew we were going to deal with that, so they flooded the market with oil, right? I mean, there were hundreds, if not thousands, of tankers in the Gulf of Mexico were nowhere to go. Oil prices collapsing, and all of a sudden, sure, we lift the bill, but we have our own energy demand, you know, and we don't have this abundance ourselves. And then all of a sudden, this happened, right? And then they can capitalize on the market with Brent. It's a whole political power play, but it took forever to get that export ban lifted, right? And so, neat story, but because of that bureaucracy and that pork barreling, the bills go back and forth. Sure, I'll do what you want, but you got to do what I want, is very healthy for the market, because you don't get just an idea is like, hey, we're going to ban this, hey, we're going to ban that, hey, we're going to ban that. Essentially, whatever the president wants just goes through the Senate and House just like it's nothing. And so people get a little more finicky in that environment because there is no check and balance in government anymore. Does that make sense? So the idea is, this is just explaining when you have total control. Wall Street is a little more finicky and volatility is there. So let's think like traders, right? We know that it's likely going to be a Republican. All the polls are showing it's a Republican sweep. We have a Democratic president. Great. As a trader, that's what you want. It doesn't matter who's in charge. You just don't want one side controlling all of it. As a trader, it makes trading harder for you. Trust me on that. Market's more volatile, market's more finicky. A lot of weird things happen. You got to really pay attention to those things. So now, if you see that the VIX has just been collapsing, it's likely because the market is understanding that we're going to get that split. You want that as a trader, just because the market is not that finicky. If Biden wants something crazy, the Republican Congress would say no. If the Republican Congress wants something crazy, Biden will say no, right? So you'll have this check and balance, which keeps the market stable. And as you see, pricing that in, right? This is telling you the outcome of the election all month, as people are liquidating their shorts, understanding that the market's gonna have a hard time being volatile. Liquidating their longs and VIX, believing the market's gonna have a hard time being volatile because the election's gonna swing. This is Wall Street's prediction of the election. We all understand this is next level trader stuff. Remember, the efficient market hypothesis prices in all available information first, and speculation and insider information. Because VIX is in decay randomly this month, and VIX was volatile going into the election month, you can see that Wall Street is now betting on a Republican sweep. Do we all understand? Everyone understand? Wall Street has already told you their belief of the outcome of the election. Markets are volatile when it's total control. Clear as day? So the fact that Wall Street is no longer betting on volatility is they're betting on that conflict is going to delay massive changes. You're not going to get news announcement, Biden shuts down oil pipeline anymore. You're not going to get news announcement, Republicans do this and that anymore. You're going to get a huge fight, and that's really what you want in government. You want the sides to fight it out so they come to what they call a Nash equilibrium, which is pork barreling. I'll give you what you want if you give me what I want, and then everybody wins, right? It's a balance where both people compromise and get something on both sides. That is stable for all stock in the market. Pretend that half of the stock market requires us to go destroy the environment and put oil pipelines down. The other half of the environment or other half of the stock market requires us to go green and build electric cars and all this. And both sides are like, no, you're not getting that. You're not getting that. So half the stocks go down. Imagine this. This is an example. I'm gonna give you the easiest way to think of it. Pretend that all S&P 500 were car companies, okay? And Republicans in House, Republicans Congress, Republicans President. All they're gonna do, let's chop down all the trees, let's pump all the oil, let's make these gas guzzling vehicles. And so the EV market will tank, and the oil market and gas car market will rally. But if that S&P was just those two things, it's gone nowhere. It's great. It goes nowhere, right? But one's crashing and one's rallying. That expansion is known as what? And the S&P, even the S&P goes nowhere. What do we call this expansion of prices in the S&P? It's called volatility. One company goes up, one company goes down. That's volatility, right? This is what got my Reddit post pulled. No, I think people in Reddit, I don't know. I just think that I just posted the talk about, I think it's maybe politics. I don't know. Maybe, but I always say I'm always politically neutral, right? I don't really represent a side, but it's okay. We talk about it from a trading standpoint, right? So does everybody understand this, right? So imagine if it was all Democrat. They're like, we're going to save all the trees. We're going to put all the EVs. Everyone's going solar power, and we're making oil pumping illegal, right? There's the oil and gas car industry, and there's the EV industry. Again, the S&P is balanced. Pretend that it's just 500 stocks. Every other stock is gas, electric, gas, electric, gas, electric. It's equal market cap on both sides. Then what happens is, again, you get volatility, and the S&P goes nowhere yet again. Now, if you get a mix of the two, yeah, we want to go make gas illegal. No, you can't make gas illegal. We're not gonna let you do it. Okay, well, we're gonna plant a bunch of trees. Well, we're not gonna let you do it until you allow us to put a pipeline in. Okay, but it has to be a small pipeline. Okay, but they have to be small trees. All right. You know, I'm fucking weird. Okay, but that's the thing, right? That's what you're looking for. So in that case, you're not gonna have one rally and one crash. You're gonna have all of them go up, because everyone's getting something better. So volatility is in decline because of the conflict, because conflict creates Nash equilibrium, which is a compromise where everyone wins something. Everyone wins something. If you guys remember the Beautiful Mind movie with Russell Crowe, this is how split politics, split house or split administration to Congress works. In the movie, if y'all remember, if you have not seen A Beautiful Mind, John Nash, Nobel Prize winning mathematician, came up with Nash equilibrium. It is a really cool demonstration of a really neat principle in game theory, where in the movie, Russell Crowe and his buddies are playing pool, and like this really pretty girl comes in and there's 4 dudes. And this is exactly from the movie, right? And they're all like, ooh, there's the pretty girl. And she has 4 friends who, again, I thought they were all hot, but that's just me. In the movie, they called her the pretty girl. They put a spotlight on her and they were like, and the friends are like, you know, not as pretty, but still pretty. And he says, everybody goes for the pretty girl. We all block each other, and she gets annoyed and doesn't want any of us. So we all lose and none of us get a girl. However, if we all avoid the pretty girl and each one of us goes for her friend, we ignore what we consider first prize. Again, I thought they were all pretty, but the demonstration is we all ignore first prize. We all choose to not compete, and we all take the plentiful second choice. Essentially, we all accept our second choice together, and nobody goes to the first choice, and nobody gets that girl, but everyone gets a girl. And he goes, that, gentleman, is how we all get laid, right? And that's a neat concept of the idea that if both parties get a second place trophy, everybody wins something. Instead of one side winning everything and one side losing everything, that's volatility. When everyone wins something, even if something small, the market is no longer volatile. So this is what VIX is planning in right now. The idea that VIX is collapsing is betting, is telling you that the net sum of Wall Street is betting on everybody's winning something, which means a divided political system. Congress as a Republican win in general. That's what this tells you. Do you understand how that? I described it the other way that leads into this effect, that volatility is in decline. When volatility is in decline on the type of election, means everybody wins something. You like that demonstration? Does that explain it very healthily to you? That's why VIX is in decay. That's why I'm long the market. The volatility is in decline. That we're not going to have drastic issues across the board. You'll have a lot of, and that's really what you want, because it forces both sides to really debate it out and really compromise on something that's beneficial for everybody, and everybody wins. Which means the S&P won't likely stay flat. If everybody wins something, the S&P is going to start to trade up, and there's not the maximum disagreement on policy means fewer things are changing. Therefore, fewer things are changing in the market, and the volatility should be stable and lessening. And you can see that right there, Wall Street was telling you their belief of the outcome of the election without even having to look at the polls. Again, the idea of a trader is you have to see things people don't see and are breaking irrational on the market. Talk about my trades really quick, and we'll call it a day. Everybody go to our Discord really quick, because we're about to break away and go into a full educational session today. Market's looking hella good. There's that Doomsday trade. A lot of people in chat nailed that. Perfect. There's that trade from there to there. All the plays we talked about this morning, all those movers. Google was the one I'm in. That looked good. Yeti was that trade from low to high. I was talking about that guy. A bounce from here to here. That's one of the good ones. Pepsi was another one we talked about today. That was a runner. Right out the door. That one looks great off a monthly hedge pressure. And one more just to review. Let's see, guys. And the last one that we did was the last plays we posted. How's my Google looking? Oh, fuck You guys are gonna watch me. If I'm right on my Google, it's a $250,000 if it hits there this month. $250,000 profit on my Google. There's Pepsi running, and the other two we talked about, Yeti and PayPal, right? PayPal was a sandwich trade, stuck between the hedge pressures, and there's that PayPal. We talked about that today. I mean, right on point. I mean, you can't really beat that. You see that? And that was right from the scanner. Questions? When I told you guys yesterday, when market was looking a little funky, and everybody says, you know, I was doing this, I was doing that, and I was like, I'm sitting out waiting. You will one day wake up with clearer signals than the previous day. And again, that's right on point. So looking good there. Market's good. Okay, we're gonna pile over into Zoom really quick. Everybody, go to the Rocket Security Discord. You have 5 minutes to go there, prep, get ready. I'm gonna take a quick break, and we'll go over there and chit chat. Don't leave yet though. Get some more information. Remember, 81% on your SPY trade, killing it, girl. Okay, nice job. Go there. Hit that like, hit that subscribe button, guys. Let's go. We're gonna call it a day. We're going to Zoom. We have a 50% off our platform. It comes with the free Discord. It comes with all the modules, all the things we're going to make in the future. We have 3 years worth of extra tools we're building that are going to blow your mind. Currently, liquidity map, scanner, playbook, market maker walls, hedge pressures, half gap, and resilience all come with the platform. It is $200 a month, but if you're in our first 1,000 members, which you're driving to now, $100 a month for life, grandfathered in forever. Even the price raises to $500 a month. We get all of our data feeds in there. You don't have to pay anything extra. You're $100 a month for the lion's share of everything we ever make forever and ever and ever. Then you can flex on people because you got in early. We have to get 1,000 members by the end of the year, so let's go. Subscribe. Message me in the Discord. I will give you that coupon, and you can join the Rocket Scooter crew. We are growing so fast, and we love you guys. We'll see y'all later.